So I just wanted to talk about these channels and the low risk kind of trade this could be. And so it doesn't matter if it's down or up, the theory is still the same. So this ZFGN takes a pop here this morning, but it makes this, this big topping pattern here with all these charts, and then rolls over and fails. But you don't know where this channel is until you know where the top line is. But you don't know where the channel is until it actually, makes a few candles on it. So anyways, it rolls over, taps down into here, which could have been, this was support. It did break a bit below it, but comes back up. But then in here, this is the resistance for it. This becomes resistance for it now, as well as obviously this high. So you could short it in this area here with looking at to cover it high, breakthrough high of day. And now we've got, and this also then becomes the top of the channel on this pop back up. So now you've got two lines that you can draw. And so you short the stock in here at 1126, so, or maybe you were short in here, rolls over, bounces back up, you add some more, and then it just stays in this downtrending channel. And there's no reason to cover this stock in here. I mean, it's just stays in this channel. Now, every time it touches down, I mean, you would look for natural support. So there was support here at 11. So maybe you cover a bit of your position at 11, and it did pop bounce, but now and then it broke through. Now it's trading down at the bottom of the channel. Maybe you cover a little bit more. But you want to just stay in the channel, stay in the trade, and that's how you maximize the profit on these. Now let me just show one that I traded earlier today, and I did fail to stay in the channel. I traded out of it. This was the channel that it was in earlier today. I bought the stock on the breakout at 25.5, and it did pop, and away it went. And this now made this. I had this bottom channel, and it held the support on this bottom channel, so I could draw automatically. I could draw the parallel channel above, starting there, even though it was only in this area here, because it broke out of this wedge like this here. So I draw this channel, and I sell on the way up, and I sell some at 26.5, which was the top of the channel. Then I got stopped out in here, and which in hindsight now was okay, because it did roll over and pull way back down. But really, I should have waited for it to pull back into here and fail before I covered. I could have sold some, and so I gave up some profit by getting out of the trade too early, because I could have sold some more at the top of the channel. Every time it hits the top of the channel, I sell some, and when it gets to the bottom of the channel, I buy some. But it did end up failing, and so it changed the pattern. Now this is the new pattern for it. It's forming this bull wedge. And you always got to keep redrawing your charts and your channels. But anyways, I wanted to just talk about, this was a talk on channels, not bull wedges. So you can stay in the channel, but then when the channel breaks, then you've got to change the diagram, or the pattern, the lines that you put in, and it gives you a new pattern. So anyways, that's my talk on drawing the channels and staying in them.